Okay, I've got the go ahead. We are live on YouTube as well, and I can see the stream as well. Okay, awesome. We're live. Uh, I'll get started. Okay. Uh, hey everyone, welcome to another session of the Alt Extra webinar. This time we are discussing a product that has inherently changed the way India invests. Yep, you might already know it from our webinar title. We'll be discussing baskets and small cases and how investing in them or via them can be a good option for retail investors. And today, to discuss this topic, we have Vasanth Kamath from Smallcase and Nikhil Aggarwal from Grip with us. I'll quickly introduce these two gentlemen for you. Vasanth Kamath is the founder and CEO of Smallcase. Smallcase, as many of you might know, started in 2016 and has redefined the way Indians can invest in the equity markets. Vasanth is also an alumnus of IIT Kharagpur and has been leading the small case team across all innovations and product categories that they bring out. Uh, as for Nikhil Aggarwal is the founder and CEO of Grip Invest, an alternative investment platform offering high yield instruments starting at just 1,000 rupees. Nikhil was one of the co-founders of Chalo, India's number one bus transport tech company, and before that, he was a vice president in Morgan Stanley's investment banking team. Vasant and Nikhil, pleasure to host you today on this webinar.
Thank you so much, Yash and Nikhil, for having Smallcase and me on. Very excited for the conversation.
Same here, Vasan. Thank you for your time. Yash, happy to be on.
Awesome. Okay, for our audience, I'll just set some more context. Small case has clearly redefined the way Indians invest in the equity market. In fact, to be honest, I, being a financial professional myself, invest 100% of my equity portfolio via small cases because I don't have the time to figure out which stock should I invest in. I don't have the time to do all that level of analysis. So small case acts as a very good proxy for me or very good product for me. In this webinar, we'll understand what makes equity, small cases, and even now bond baskets an attractive investment option for retail investors. This is the 10th webinar in the Alt Extra series, which is curated by Alt Investor. Alt Investor, for many of you who might not know, runs India's largest community on alternative investments. The Alt Extra series is proudly powered by Grip Invest. I am Yash Roongta, and I'm your host for this webinar series. Um, while I discuss some key questions I have for Vasant and Nikhil on this webinar, keep your questions incoming. There will be a chat box wherever you're seeing this live, whether on YouTube or on LinkedIn. We'll pick up as many questions as we can at the end of this discussion and get them answered for you. Okay. All the housekeeping done. Let's get started. So I will start with you, Vasant. Been quite a journey, 8 years since Smallcase started. I just want to know your ideology. How did the idea for Smallcase come about? What were the roadblocks for you, and how did you finally get started?
No, sure, Yash. Absolutely, it's been a phenomenal journey. We turned 8 this year, and honestly, like when we started in 2016, I don't think we could have kind of preempted how far this whole concept could have gone. You know, a lot of gratitude to all our users, the entire industry, as well as how the ecosystem has kind of adopted this concept. But when we started, again very generalized data, but we had I think 2x the number of investors, unique investors in mutual funds than we had demat account holders. At that point, I think one of our core thesis was that more people would adopt the demat account structure. That for a lot of reasons, obviously you can transact into stocks, ETFs, bonds that are listed on the exchange, but also it's kind of much more safer to kind of hold things in your demat from a maintenance, from a transfer perspective. It becomes much more easier. So people, when at that time at least, that so when they used to start investing, like mutual funds is a great vehicle to start your equity investing journey. And some part of them used to also come to demat to kind of manage their own stock portfolio, but the approach couldn't be more extreme, right? Like in a mutual fund, you're essentially investing into a fund, and then the fund manager handles kind of what the allocation should be, how the constraint should be rebalanced, etc. Whereas when you come to managing your own stock portfolio yourself, everything is on you. Like you do the research, you do the you take the decisions, you take the calls, you invest, you track, you manage it, you monitor, etc. All of that is on you. So that's where we felt some product that could combine the benefits of the two, which is having the portfolio diversification that you have in a mutual fund, the professional management layer that you have in a mutual fund, yet at the same time, from an ownership perspective, you own the underlying constituents in your own demats, which means that you have the transparency, you have the control, you have some amount of decision making that you want to do. Made a lot of sense. So it was actually a way for people who wanted to invest into stocks to have some layer of professional management alongside that. So that's kind of where the concept of small cases came in. As in, this wasn't a new concept. It's always been there. Even when say physical shared certificates were traded, this concept was called stapled securities. Like you had the concept of a broker stapling multiple shared certificates and giving it to you. Even when say like model portfolios that today research houses offer, that's been going on for decades, both at the retail and institutional level. I think the difference that we wanted to create because of how technology had come in was how do you layer on this portfolio research and kind of link it with transactions so that you can have a much more seamless way of actually executing it, tracking it, and managing a portfolio within your overall portfolio. And I think that's something that we wanted to really make very simple for the individual investor.
Awesome. Okay. Staple securities, I did not know about that. So very interesting to know. But when you launched, were there any regulatory roadblocks for you? Like, because I mean, digitally, this concept was first. Any observations from SEBI or any regulator that this should be allowed, shouldn't be allowed?
So that's what the concept wasn't something
New.
completely new, right? Like,
Yeah. Sure.
and we were dealing with activities or items that were already regulated. So because we started out with small cases or portfolios of stocks, stocks are obviously listed on the exchange. It's a regulated product. You had like as securities, people who are creating these small cases, at least on our platform, are all licensed entities registered as research analysts. The transaction happens through a registered broker. You hold your trading and demat account with that broker. So every part of the workflow and the product that we're dealing with is regulated. We had to kind of conform to those guidelines itself. That if there's research happening, who's creating that research? Are they licensed? How is that research happening? What are the disclosures supposed to be done at that point? When you're transacting it, we had to kind of conform to the guidelines or the workflows that broker has to do. So that's where we work with brokers, we work with licensed entities across our thing. So never had that inkling of doubt where this was not regulated, because that's what we're not creating a completely new concept. We are essentially just making it a lot more efficient.
No, thank you, Vasanth. Nikhil, you launched something similar, but for bonds. I believe even Grip was the first one to do it. It's called baskets, right? Tell me honestly, did you take any inspiration from Smallcase?
Yeah, I have actually been very verbal, and Vasanta, I've told Vasanta as well, very open about it, that it's definitely inspired by small case. I think it's great to look at industry leaders like what Vasant and small case have done, and say how do we bring the same advantages in a different product set in fixed income. So there's no question about it. And exactly what Vasant said in terms of the compliance aspects or the regulatory aspects of it, that's exactly what's been mirrored. Even the use case in a way is the same, where on the one extreme someone can invest in a single bond but then have to do all the research for it and take individual exposure, and on the other side there are debt mutual funds, where the risk reward is very different, and the reliance on a portfolio manager is very different. The small case or the basket lies somewhere in between, right? And it's all about providing the user choice of how they want to invest. Ultimately, both Smallcase and Grip are really platforms that provide convenience for investing, and empower the user. So there's no question about it, and we're very happy to be even put on the same stage as Small Case. We have a long journey to go in making baskets as big and successful as Small Case has done for equity.
Sure. And Nikhil, touching upon the regulatory aspects as well, I believe everything that Vasant said applies to bonds as well. They are listed, rated, regulated, and I think so baskets are also curated by research analysts, right?
That's right.
Anything else from a regulatory perspective?
Nothing else from a regulatory perspective. I think maybe just nuances, right? So you can obviously, and what we've been able to do with baskets is expand it beyond bonds to also include listed SDIs and regulated SDIs. So we've been able to offer more choices to investors in terms of what they can put in the basket. It's
Sure.
obviously, there's a research analyst who provides a view on the basket and certifies the basket from a regulatory standpoint. And then every individual bond goes and sits on the user's demat account, which then allows compliance to become the loop to be completed.
Okay. Awesome. Thank you. Vasant, users also have the choice, and Nikhil has covered it briefly. They have the choice to invest in mutual funds, PMS, or even the new product category that maybe SEBI is bringing out. Why would a retail investor prefer a small case? And I'm talking about the equity angle because the risk rewards and debt are a bit different. But equity, mutual funds, or PMSs can still offer the kind of returns that small case do, right? So, what are the benefits of small case?
No, absolutely. I think again, I think we're all very lucky to be in this time of how India's savings are getting financialized. As in, if you would ask me whether this would work maybe a decade earlier, jury's out. We would have had to maybe stick it out till now to kind of see uh, how retail investors are actually building their portfolio. It's very different from what we even saw 5 to 6 years back. And what Nikhil mentioned, where the retail investors now has access but also desires choice, is very important in this, because essentially when you're investing into equity as an asset class, there are multiple ways to do it. Like you can, the basic one was obviously going and buying stocks yourself, like holding those stocks in your account. That's the most direct way to do it. Then you have mutual funds, which offers like a pool structure. A fund manager manages it. You have an ETF, you have a PMS, you have an AIF, you have a small case. So these are all different vehicles or form factors for you to access equity as an asset class, and each of them has their own benefits, right? Like again, maybe just diving a little deeper into this, let's take, say, gold as an asset class. Now different ways to also own gold through different instruments. Like you can buy gold, physical gold yourself. Now you have digital gold, you can buy a gold mutual fund, you can buy gold ETFs, you can buy jewelry. And usually what happens as, say, newer formats come is they provide, one, two, or three, uh, like it makes one or two or three of these attributes better. Either it could be customization, it could be costs, or it could be say the liquidity of the product itself. And for that very reason, you have so many different formats to access the equity asset class as well. And that's where, say, small case has its advantages over, say, something like a single where you manage your own stocks. Like I said, by design it's a portfolio, so it's diversified, as well as it's managed by a professional. So you get that versus single stocks. Versus, say, other things like a mutual fund, it's not a pool structure. That's both a advantage and a disadvantage in itself, where on one hand the investor gets full ownership and hence control and transparency. On the other hand, then you don't have the tax advantage that you have in a mutual fund. Kind of you bear
Yeah,
the short
yeah.
term tax each time you rebalance it. But that's what I
Sure.
think now, at least, and it's a very fast evolving ecosystem where the retail investor wants to construct their portfolio in the manner that they think best for their own requirements, which is where all of these products have a place in the investor's portfolio. Depends on how they're thinking about it, what's the objective from this. The other thing in a small case is also that, because these are also more focused portfolios versus, say, a mutual fund. They're more, the average small case would be between 15 to 20 constituents. It could be stocks, we added ETFs, then we added real estate investment trusts, etc. But essentially 15 to 20 constituents, which is far more focused than say a mutual fund. That's another consideration that an investor needs to take when they're looking at small case. But because of these reasons, that's what a product player or a product class is, how people look at small cases, and I think they understand very well the differences between other formats to take this choice. But I think this was missing as a layer or a option from an investor's perspective, and thanks to how say participation has really increased. Like I was telling you the numbers when we started, there were 2x the number of mutual fund unique investors compared to demat account holders. Today it's the opposite. You have 10 crore unique demat account holders, and you have close to 5 crore mutual fund investors. So in this environment, obviously the more options, the more choices that you can present to the retail investor, the better for how they can construct their portfolio.
You talked about numbers, and I recently read Smallcase has over, I think, 10 million investors, and I mean that's a humongous number, uh, because our country, the financialization has just started, and even then, 10 million is, I mean, it's a dream for a lot of fintechs to reach that number. So, could you share some of the metrics that you saw early in the journey of Smallcase that gave you the conviction that there is a very definite need for this solution? Uh, and if you can also talk about what were those metrics today and how they have grown as well over time.
Absolutely, Yash. I think more than metrics in the very early stage, as in metrics started coming in maybe say 18 to 24 months after we launched, then you get into some sort of state where looking at numbers makes sense. But very early on, I think it was very subjective. But again, that's what it depends on how you read it, how kind of whether you're in denial or you want to really figure out the truth for yourself. But I think a couple of things that we felt were going right, and retail investors were resonating with this concept. Like I said, we wanted to kind of help people take a portfolio exposure as part of their overall portfolio, right, to equities. Now, one thing that was make or break at that point for us was whether people would look at a small case, they would then look at the constituents, and then they would say, hey, let's take a part of this and then invest. Because it was very much possible, like where people would say, okay, you've curated this strategy stocks or this sector or this stocks from this idea. Now let me buy 2, 3 that I layer on my own research on, and that would have been fatal because then you're not truly sticking to what the research is supposed to be. That didn't happen, thankfully. Most of the investors looked at the entire portfolio, not in isolation as different constituents. Even not just while investing into it, but while also tracking it, they looked at the portfolio level returns. They looked at, say, how to invest more into the portfolio overall. If they're exiting, we have this option of exiting partially from a small case as well. They exited partially so that the constituents and weighting still remained intact. So I think that one was important for whether this concept would succeed. I think the other one was again very subjective, but how people were referring to this, whether they were talking about this as small cases, like I invest in small cases, or I use the small case platform to invest into stocks, right? Like so, the former started happening, and that's where we realized the people are looking at this as a format or an instrument that they could add to their portfolio. I think after say 1.5, 2 years, and to now, I think the metric that makes sense and that's something that we track religiously is what portion of the investor's equity portfolio is in small cases, because that is the only measure to kind of know whether people are paying with their wallet or not, in the sense whether how much they trust the instrument, how much they value it, how much they are continuing to allocate to it. And like for example, Yash, you said 100% of your equity portfolio is in small cases. Similarly, that's a number or a metric for us to kind of keep seeing whether we're doing the right things or not. So when I think we measured it for the first time 3 to 4 years back, that number was around between 8 to 10% of the stocks and ETFs portfolio of an investor. Today, it's between 25 to 30%. So it's a growing number. The idea is to see, whether we can keep having the right set of options, products for the retail investor to allocate more of their equity portfolio to small cases, whether we can go to a different part of their portfolio as well. Like for example, Nikhil and Grip are looking at the fixed income allocation of the investor. For us, that's what the next thing that we're very excited to launch is basically mutual funds in small cases. So in the small case format, so can retail investors allocate to mutual fund small cases as part of their MF portfolio. But yeah, so that's I think been how we measure success for the platform and all the entities or all the products on the platform for us.
Awesome. So looks like I'll have to move my mutual fund portfolio also to small case now.
Look forward,
Once
absolutely. We would love to get you there.
Awesome. Nikhil, I know baskets are just 3 months old, but how is the user response on Grip? And from your perspective, why are people choosing baskets over maybe a debt mutual fund or any other available option out there?
Yeah, sure. I really liked Vasant's metric, and that's something we'll definitely hope to track in the future. But today, again, we're very early in the journey. So the way we are looking at it is what is the adoption for baskets versus individual bonds on our platform. And if that number is high and growing, then it reflects that this is something that users are interested in. We are now currently at about 35% of all orders on the platform coming through baskets, which is I think it's definitely higher than our expectation, right? I think the takeoff has also been higher because the concept of baskets is more, versus 8 years ago when small case started. I think the concept is better understood. I think in the case of bonds, I think there are two reasons why baskets are becoming popular. One is it is definitely, the understanding of bonds is actually today, in my view, less than the understanding of equity. If you think about our households, growing up, how many of us were told or talked about investing in bonds? The answer was zero, right? We were either talked about investing in equity or fixed deposits. That's because the product didn't exist at a small ticket size. So as the awareness is growing now, the understanding of what to invest in, how to look at ratings, how to look at risk is actually limited, and hence baskets becomes a good way to begin your journey in bonds, where you have a certain goal which is high rated, short term, backed by a certain type of assets, and then you have the added advantage of diversification. So I think that's one big reason. I think the second is that unlike equities, where mutual funds is a good substitute, right? It's a different substitute, but it is a substitute. And there are lots of AMCs with lots of different mutual fund strategies. In the case of bonds, there are actually very few mutual fund strategies. Even most, I'm not saying this number is statistically there, but just directionally, over 90% of all mutual fixed income mutual funds will be around AAA rated or GSEC securities, which means you're earning 6-7%. Even credit risk mutual funds are today in the 8 to 9% return range, right? So the width of the opportunity available in debt mutual funds is very limited, and hence bonds by themselves and then baskets actually become a far more differentiated offering than it is available in the equity world. So these are the two other reasons, maybe different, slightly different from small case and equities, why we are seeing fairly good success on adoption of baskets.
Makes sense. Nikhil, thank you. Vasant, we've talked about regulation already in terms of an RA or RIA needs to construct a portfolio, uh, and apart from all the other rules, these are regulated products. Are there any other sort of regulations that apply to small cases? Primary, and I see some questions around performance measurement, past performance. Are there any rules around that as to how they should be demonstrated on the platform by SEBI or other regulator?
Sure. So, like I told you, like today we work with over 250 entities. Like they create small cases, they advise on small cases to their clients. Some of them are brokers who kind of enable the transaction of it. But all our partners in this 250 plus ecosystem are all regulated entities. So from day one,
Sure.
ensuring that all workflows are according to regulations has kind of been inherent to this. But yes, like what we didn't touch, as in when we talked about it earlier, that's what you asked about, whether this concept is regulated, to which we said, yeah, the nature of activities, the securities all mentioned, all the entities are regulated. But because now, say, from adoption perspective, small cases or these stock ETF portfolios have become a large part of, or at least our investors' portfolios. There have been certain guidelines that we have kind of taken as a platform, so that, from at least for our own internal operations clarity, as well as how kind of, we should work with partners, what partners can do on the platform, how investors can access these products, kind of we had to kind of create some, for example, like you picked up performance. If say for, there's a small case creator, an RA who comes today to the platform, publishes their own small case, uh,
Sure.
performance gets tracked from today. There's no back testing, there's no extrapolation of current constituents returns to say, hey, this would be the last 1 year returns. And that's been a call that we've taken. I don't think there's anything from a regulatory perspective yet. Yes, there's at least a proposal to have a performance validation agency that's come up, where they say any license holder, they're putting out a product, there should be someone, an entity or an agency that can validate the performance, and only then, you can market it or showcase it. But even without that, I think, taking this call of saying we are not going to kind of show backtested performance, it will only be live performance, and all performances include, whatever changes happen, the rebalances. It's not just a simple extrapolation of what today's constituents are. Right? We've also kind of kept the performance calculation methodology transparent. So if you go to our website, there's, a return calculation methodology page where you can see how the return calculation happens, and no, say, creator of small cases has any way to kind of change that. That's calculated by the system. We keep iterating on that methodology, but then it's a system that's co-created with all our partners, and that kind of ensures. Even on other things, I think, be it say, what are the constituents, because for example, today we have all like exchange traded products is simpler for us to launch versus say a non-exchange listed security, because we are connected to the exchange via
Sure.
18 brokers today. But there again, we've taken the set of calls that we don't want to do certain assets within the exchange traded securities itself. So the, in addition to say what are the regulations, I think, as a platform, we've also taken some at least operating philosophy or guidelines internally or principles to basically say, hey, these are things we want to do, these are things that don't make sense for the investor or for the platform itself. So those are things that keep changing over time. But now I think the concept of model portfolios is a lot well known. It's now recently also been defined from by the regulator that this is an explicit research activity. It was earlier more implicit, but now it's being defined as activity. So I'm sure there'll be more guidelines, more things that we'll have to do. The consultation paper spelled some of them out. That's what we're waiting for final regulations to also act on them in the final onto the platform as well. But I think it's been an interesting journey, kind of figuring
Sure.
out how both partners as well as our users kind of access the product, and what are the right set of things to do at each point to kind of ensure more transparency, better access, and more information on the platform.
Okay, got it. Thank you, Vasanth. Nikhil, I assume past performance as a concept is not applicable to baskets per se, right? Baskets give you that fixed yield upfront and you get that. Am I right?
That's right. Obviously, you past performance as a metric is important to showcase, and the way we have done it, at least with both bonds and baskets, is to provide past performance of the underlying securities, right? Because
Okay.
have there been a delay or default in it, and some
Okay.
of and the again metrics will be different. Obviously, it's not about returns because those are fixed, but you want to know about risk and performance. So I think that's been a effective way for us to represent how the baskets have performed.
Yeah. Yeah. Okay. Vasant, another one for you. At a macro level, do you see millennial or Gen Z investors prefer direct investing without advisors or asset managers? Or do you see faster growth of advisory in wealth management? So when I think about small case is a form of advisory in the form of, this is the basket of stocks that you need to buy. When I speak to more and more millennials, and in fact more and more Gen Zs, like my sister, she's like, हाँ मेरे को ये किसी ने बताया है, ये अच्छा है, मैं इसमें पैसा डाल देती हूँ. Why do I need to give money to a small case manager or something? Do you see that trend becoming bigger, or it's just the nature of the markets right now that everyone is making money, so they're very confident?
So maybe I'll firstly add some jargon to this. Like obviously, what you're saying is one is self-directed, where the investor is taking their own calls. The other one is managed, where it could be research, it could be advice, it could be a fund manager kind of taking that into a structure and doing it. But managed solutions versus self-directed, I think honestly, more than say you know secular preference from a set of investors or a type of investors, it's to do with the portfolio size. Like if you look at a newer investor, they're obviously coming in with a smaller portfolio to one asset, and when they're doing that, that's what they've been educated about it, or it's caught their attention because of something, which is where they start out usually self-directed. But over time, as their portfolio grows, their maturity grows, they understand they have to diversify, and this has been true for all sets of investors. There's obviously this period where they want to take calls themselves, they want to burn their hands. Some people directly come in and basically say, I don't understand anything at all, let me just give it off to some managed solution versus trying to figure anything out myself as well. So completely depends on the portfolio size, I feel. I think if you look at it, that's what, if you define whether managed solutions will grow faster, if the underlying metric that you're using is basically AUM, I think yes, it will grow faster, because a newer investor will come with a smaller portfolio size, which will be self-directed. The larger portfolio sizes, a larger part of that is going to get more and more managed over time. So the other reason is also, as they diversify, the number of asset classes or exposures or types of products that you can take access to is just exploding, right? Like you have two examples on this conversation itself, which did not exist, say 8 years, 9 years back. So like, and that's actually exploding in terms of the amount, both in breadth as well as depth of asset classes that you can take exposure to. So it'll be more and more important for an investor to have a larger part of their portfolio managed versus self-directed. Self-directed will always be a part, but at least in my view, I think a larger part of the average investor's portfolio will be managed in some way. It could be via research, advice, or managed through a fund. But that's how most markets have also kind of gone. I think
Sure.
as investors mature, I think that's the path they'll also take in India as well.
Nikhil, anything to add?
Yeah, I think so fully agree with Vasant. I think there are two different dynamics that we see in play at a cultural or of emotional level. One is the desire for control among new investors, right? I think there is a information is more easily available, and there's a desire to have control. To some extent, if you're a new investor, your typical fund manager or someone who gives you advice is your bank RM, and I think that for a lot of people doesn't build enough trust. So combined with information, people are then able to try to solve for themselves, and obviously platforms and businesses like what we are doing helps them do that. I think the one somewhat unknown in this space is what AI will do. And AI could fundamentally change or accelerate the journey towards more managed solutions faster, because it will allow more people to have access to expert opinions or expert fund management at a much more cheaper fraction of a cost, and still give a sense of control, right? Because you're interacting with a machine and not with a person. So I think that's one thing which may make things different.
Okay. Interesting. Wasn't this question just came to my mind, and I hear it from friends and family also कि यार 4,000 म्यूचुअल फंड है या फिर 2,000 म्यूचुअल फंड है. Which mutual fund should I choose? Does that happen with small case also? Even small cases are advisor driven. अब किस small case में डालना चाहिए? How do people answer that question? Are there any metric, or are there any things that people should look at when they are choosing small cases? Vasant, you're on mute. Sorry.
I'm sorry, Yash. No, it's very similar to mutual funds actually. The catalog is not as large today. I think there are 500, close to 500 professionally curated small cases. So, and these are mostly equity versus mutual funds have more asset classes as well within them. So, not as large a selection as you have in mutual funds, but it's the same principles that apply, right? Like you have the same set of information that you have in mutual funds that you have for a small case. There's like a daily updated fact sheet that you get for a small case, right from the returns to say dividend yield to the Sharpe ratio to what are the constituents, how frequently it's rebalanced. If you have access to a small case, we actually give you the entire uh, daily NAV series. In this case, say the close index value for that small case also, so that you can decide for yourself how drawdowns look, etc. But it's I think how mutual funds today, again these are the two ways. One, there's an intermediated way, someone advises you, you go via distribution or a broking platform to access this, or you do it yourself where you go directly to the fund house and invest, or you go to a direct platform and kind of invest into these funds. So the same choices exist for small cases as well, like, and that's one bit that's growing now, because for us as an ecosystem as well, we are focusing on working with more advisors and wealth platforms. Earlier, that's what today, if you come to a small case app, you get all the information to sort and filter yourself, but ultimately the call is yours, in the sense how you want to construct your portfolio is your call. That's very similar to investing directly into mutual funds. But now the set of participants that we are seeing in our ecosystem, the partners that we are associating with, are the wealth platforms, the advisors who are then basically shortlisting a set of small cases based on the entire catalog, taking that to their customer, recommending what mix they should be investing into those small cases. So it's a newer part of our journey. So I think maybe a few months down the line, you'll see a lot more of these curated options onto how to build your small case portfolio. But yes, theoretically, we are increasing the number of asset classes. The permutations, combinations you can create with these asset classes or these constants that you have as part of the universe is very large number. So I'm sure over time it will only become the catalog of small cases will only keep increasing. So that's where the shift also, or the focus on having a lot of advisors on the platform who can actually then curate how you should invest into small cases for your own personal portfolio and based on your goals, your inflows, etc.
Again, question just came to my mind, but do you think there'll be a small case of small cases?
Uh,
One master RA or RIA that, is very well renowned, create a small case of small cases.
No, that's what it need not be a small case of small cases also, yes, because like that's what, as you have underlying more and more asset classes, essentially theoretically again your entire portfolio could be one small case. So that's what it depends on how some of the partner creators on a platform start creating these small cases. But yeah, at some point we've also seen this where people want a large case, where they're saying, give me a large case, can I put 4 5 small cases into it, can I get that as a
You call
recommendation
it
itself.
Raj case, okay.
Not calling it anything yet, I am just giving an example, but that's where I think once we have critical size of these advisors or wealth platforms using this today, I think how they do it for mutual funds, they don't necessarily create a portfolio of mutual funds and give it to the customer. They basically have a curated set, and then they recommend a mix which is personalized or customized for every individual. So if it goes that way, maybe a large case doesn't make sense, but there is very high potential for something like this to exist. But taking it one step at a time, as in like
Awesome.
with some of these newer concepts, you have to wait for feedback, see how users are reacting to certain things, and then take a step in terms of building something.
Okay, awesome. A lot about the equity market. Wasn't any particular views about the Indian bond market as well? How do you think it's growing from your perspective?
Uh, I don't know as much as say both either you or Nikhil, right? But again, I've always believed it's a very important asset class, like fixed income for an investor to allocate to. Uh, like Nikhil mentioned, also I think the traditional options have always been FDs. Then mutual funds have come in, but now kind of from both a regulatory as well as an industry perspective, more companies are turning to other sources for debt, right? So, and I think it's today at least in terms of investors, because you don't count people investing or saving in FDs as investors, you call them depositors mostly, but in terms of investors, there's a huge skew towards riskier assets. I don't know whether it's right for, the where, from a stage perspective the country is, whether we should be more risk seeking, etc., from a portfolio construction perspective, but it will change over time. It's a function of what the average median age of the country is, etc. As people kind of starts going towards say maturity of their careers, they'll want to use those portfolios. A larger part should be in fixed income, and that can't be say just FDs. Those have to be longer term fixed income options. So from an asset class perspective or from a product instrument perspective, I think it's very important. I still think, at least from the data, it's largely institutional driven. But if you see all the steps being taken by the regulator over the last 12 to 15 months, I think it's all in the right direction to provide more access, reduce kind of or increase information about this, increase confidence in bonds as and product layer itself. And there are multiple, right? It's not just corporate bonds that are getting unlocked. You see things on the government side as well, from state governments, etc. So I think we haven't yet started also on how retail will participate into bonds. Like we're seeing obviously Nikhil, Grip, you doing a lot of education around all the use cases and scenarios that make sense. I think we are yet to see the kind of inflection point that we've already seen in equities over the last 3-4 years for how bonds can be allocated from a retail perspective.
Okay, got it. Thank you, Vasan. Nikhil, you talked about risks in small cases also a bit. The user should choose their own small case with the wide variety of options available, and the upside is not guaranteed, of course, considering the nature of equity market. What are some of the risks that investors should be aware of when they're investing in baskets as well?
Sure. So obviously, without I think the obvious one is credit risk. Just because you're in a basket doesn't mean that the credit risk of the underlying bond is changing. What is definitely happening is that you're getting diversified, and hence your total capital is split across multiple bonds. Even if there was an impact on one, the overall impact on your portfolio would be lower. I think that's to me is really the biggest risk from a basket's point of view. Um, I think the some of the other risks really associated with equity don't play out as much in the case of bonds, right? I think the second one that and I'm taking baskets not just on grip but the concept of baskets. I think the second one for people to watch out for is how are these being constructed, right? Is there a professional advisor? Is there someone qualified to construct them? Are they really thinking about diversification in the correct sense, or is it a basket of bad things? So I think that level of check needs to be placed on by any investor, and I think the ability to rely on a professional advisor who is also SEBI regulated, I think is an important thing. We have seen, the concept of creating your own baskets. That is really not the same thing. That's more of a convenience feature. It's like creating a cart on an e-commerce platform and then checking out. But there is no theme or logic behind it, and definitely no professional advice. So I think that's something that should be looked out for. Maybe not a con, but the third thing I'll add is that baskets inherently do differ from a fund where you receive payouts in the case of bonds multiple times, right? Because each bond will pay out its interest at different points of time in the month, while as a mutual fund will normally pay out once, right? It has a single payout. I think investors should watch out and be careful of the cash flows so that they're able to plan for reinvestments. Otherwise, what will happen is they'll end up having drag or lower returns because of the time gap between these payouts.
Uh, okay. No, very important point, Nikhil. Reinvestment risk is also a risk, and people should be mindful of that. Any new product innovations on the basket side, Nikhil, that you're planning to bring in terms of enhancing the customer experience or growing the market?
Yeah, so the biggest, it was great to hear that there are about 500 small cases. We're today at, normally around 5 baskets. So there's a long way to go in terms of the number of options available. The biggest challenge to that is that most bonds today are issued with a minimum ticket size of 1 lakh rupees. And hence, if you put 5 bonds, you're looking at a 5 lakh rupee basket. What has changed, as many of people listening to this webinar would know, is that now bonds can be issued at 10,000 rupees, and then there are publicly issued bonds at 1,000 rupees. What we are what we have started seeing is the ability to create baskets of 10 bonds at less than 1 lakh rupees. I think that is really going to be the big next enabler for the baskets product to grow. We would love to see 100 technically 100 bonds each of 1,000 rupees at a 1 lakh rupee ticket size. So I think that's the first big place where that innovation will happen. I think the second piece is working with more professional advisors to create more sophisticated, more thought out products within the basket space. I think that's number two. Number three, we are trying to do some enhancements at our end in terms of technical enhancements in terms of how users experience the basket. I think they'll lead to better experience, better understanding of the product, and obviously our ability to combine bonds and SDIs into the same basket is another thing that we want to continue focusing on in terms of enhancing diversification. Yeah.
Awesome. Thank you, Nikhil.
Yes, if I can take the liberty to ask a question to Vasanth as you were talking.
Please do.
Just curious, Vasanth, on two user behaviors. One, do users go to multiple advisors, like multiple professional creators in a basket, in a small case, sorry, or do they normally stick with one? Very curious to understand how that behavior is done. And second is, do you see like what's the normal split between someone who creates their own small case versus invests in an existing small case? Or do you see that also being a high overlap?
No, sure. I don't have the exact numbers on this, but at least I know that part. Out of people who bought, say, small cases from different research providers, 80% of those actually have small cases from different research providers. Like at least people who bought two and more, it's from different ones. 80% are different versus the same one. Again, on at least the creators on the small case platform, it's not like say AMC setup, right? Like these are not multi-style, multi-strategy investment managers or research experts. Most of them, that's what are kind of single strategy boutique investment experts in that manner. So again, the small cases they come out with are also around that single strategy or idea, which is where investors obviously want to diversify beyond across strategies, which is where then they'll automatically start choosing multiple creators of small cases. This people creating their own small cases, so you can't discover those small cases anywhere else, right? Like if somebody is creating a small case, it's usually private with them. That has a high overlap with people who are also investing in other small cases, because this is, like you said, it's a convenience feature. People kind of want to manage portfolio on their own. Like this kind of gives them a better way to do portfolio management of their own picks, and for different reasons they'll want to create their own portfolio. Like a lot of actually user created portfolios are on ETFs, where they want to kind of take their own ETFs, put it in the instead of kind of relying upon a pre-created or a ready-made one, where the allocations between different asset classes are already defined between what you can do in equity, debt and gold. They want to create that on their own, and then they set up an SIP as something that they are investing towards a goal. I think we'll see more of that when we launch, say, for example, a mutual funds, but it's not a mutually exclusive behavior where people who are creating their own small cases are relying on their own research and don't want to take other people's research. Very high overlap between the two. It's almost kind of part of how people allocate to small cases. So from a number perspective also, users creating their own small cases. If I look at the split of assets of the total platform in that, it would be one fourth. So around 23%, to be honest, is to be exact, is actually in small cases created by users themselves.
Understood. Very and very similar. So we don't see people exclusively investing in baskets. They will invest in baskets, but then they will also invest in a specific bond or an SDI, which they may associate with, which they may like from a return perspective or tenure perspective, and it's not a very exclusive behavior that we see. Interesting.
Awesome. Okay. Uh, I'm done with my questions. I have at least 10 to 15 questions here pending for both of you. So let's get started with the audience Q&A. Vasant, one is a product feedback for you from Parag about the why do we have to set a mandatory auto pay for subscriptions? Consider giving a choice rather than recommending to cancel auto pay mandate post subscription. I'm not aware of the specifics, but yeah, I mean, if you want to comment on that.
No, no, noted Parag. As in, we've got this feedback from other people. We did provide the choice. This led to a different experience as well. So, noted on that feedback. Thank you for that.
Awesome. Okay. Nikhil, one feedback for you again from Parag is Leap. I think that's the early access program. Offers assets at a higher ROI for a high ticket size. Instead of Leap, can we have everyone accessing the asset together and those buying more units getting a higher ROI?
Yeah.
Which means, unit-based ROI
Yes.
feature.
Yeah, no, Parag, again, feedback noted. It's also come to us from multiple other users, and hopefully in quarter one, we'll be able to launch a feature that allows for different rates depending on the number of units you purchase. I think it makes a lot of sense. So it's something in our product roadmap.
Okay, awesome. Nikhil, one more question for you from Anand. How does it affect an investor when some of your offerings are said to be SEBI regulated and some RBI regulated?
Got it. Um, so maybe just a couple, taking a step back, as an OBPP platform or online bond platform provider, which is the SEBI license that we have, we are allowed to offer SEBI regulated listed corporate bonds and then also offer products that are regulated by RBI or other regulators. So that's the nature of the license and what we are allowed to do. um, Listed bonds and listed SDIs are obviously regulated by SEBI, and that is why they're listed products. But certain types of SDIs are not listed, and these come under the category of an RBI regulated product because they are issued by NBFCs. And by the virtue of an NBFC being regulated by RBI, these are considered as RBI regulated products. So that's the differentiation that Anand is talking about. From a impact to investor perspective, there is only one difference. The SEBI regulated products are all listed, which means that you could technically sell them on the exchange. You could place a sell order on the exchange and exit them. In the case of an RBI regulated product, they're not listed, so you can't sell them on the exchange. That does not mean that transferability is much different today. Even listed products have limited liquidity, and all our products are advised to be hold to maturity. We've always said that in case on either products there is a need for you to sell them, you can always reach out to us, and on a best effort basis, whether it's a SEBI regulated or RBI regulated product, we'll be happy to make that liquidity available to you. But there's no other difference. All of these are demat held, all of them are regulated, all of them are fixed income. Everyone provides returns on a monthly basis, and obviously then comes to the specific details of the investment only.
Okay, awesome. Another question for you, Vasant. Both the platforms, Grip and Smallcase, have FDs. How does Smallcase or Grip, for that matter, make money from FDs?
I think it's the same for both of us. There's obviously some commission that you get for mobilizing an FT. That's what we get from our partners, where kind of we help them get the deposit.
Yeah,
Awesome.
I'll just add that there are all FDs across any platform today are actually very standardized in commercials, and the receiving NBFC or small finance bank pays out a certain commission There is no charge to the user. It's a cost paid by the receiver of the FD.
Awesome. Question for you, Nikhil. Do you personally invest in the assets listed on Grip?
Yeah, I've said this a number of times. I invest in actually every asset listed on Grip. I may not have invested in the FDs, just to clarify. I think that's something, but I don't think that's the question. But I do invest in every bond and STI we have on the platform. And generally at Grip, our philosophy is that a majority of the team invests in almost every asset. Um, the and I think that that's been a philosophy since the beginning of Grip. We hope to continue that practice.
Okay, awesome. Question for you, Vasant, from Colonel Sanjeev Kumar. Do you have an advisory for retirees who can invest with due diligence and guidance?
So, thanks for the question, sir. I think we don't provide advisory as a platform. That's what we work with advisors who kind of then shortlist or curate the set of small cases that is relevant for you as a customer. So, if you can write into us, we are happy to recommend or refer to someone who could do that. I don't know if you've seen these products are on our platform, which are the Horizon series of small cases. These are not just retirement, but it would be towards any goal. So, for example, there is a Horizon 2030. Now, the idea behind that is if you enter it into today, that's what it's more equity than debt, and there are also other constraints in it. But over time, it keeps rebalancing towards all debt during at the maturity in say 2030. So, we have multiple series of this. So, Horizon 2030, 2035, 2040, all investing into ETFs across different asset classes. So, as a goal based or just a retirement solution, if there's only one product that you want to allocate to, I think that's something that you could look at and consider. But if you want to look at other equity small cases, a mixture of equity and ETF small cases, happy to refer you to an advisor that we work with.
Awesome. Okay. And Nikhil, is that the same for you? Do you have any advisory at Grip for retirees?
Um, Again, we're by license, we're not an advisory platform, so we do not advise, and nor are we allowed to advise. Um, I think bonds in general are are better known to be suited for people who are retirees, senior citizens, and I think the simple rule to use is to invest in higher rated bonds because they are generally safer. But I think it's a great suggestion. We'll try to come out with a specific basket meant for retirees or senior citizens. One of the things that we had done in the recent past, given how the interest rates are, we had come out with a basket which was more oriented towards bullet repayments, so that you could be
Hmm.
locked in for longer and only have interest rates. But we'd be happy to work with our advisors to see if they can recommend a basket, especially from a retirement perspective. In the next few days and weeks, you will see on Grip also we will be adding GSECs, and we'll be adding more AA and AAA rated bonds, and those at least from what we know from a risk perspective are more suited for senior citizen retirees.
Awesome. Okay. Good to know. Nikhil, another question from Krishna Raghavan. SDIs are technically in a way basket, right?
That's right. Thanks for saying that. They are effectively a pool or a basket of underlying loans and assets. So the SDI is a basket, and Yash talked about a basket of a small case, but now you have a basket of an SDI already available, and you could put multiple SDIs with different loan pool assets together. You could think about a SDI which has 4,000 loans, and then combining it with two other SDIs to create almost 10,000 loan portfolio that you are investing a few lakh rupees in, getting incredibly diversified.
Okay. Awesome. Um, Question for you, Vasant, from Parag again. Hi, Vasant. Can I create my own small case and use that to buy a basket of stocks in one click?
Absolutely, you can. You can go on to smallcase.com/create or download the app. I think it's now in the more section where you can create your own small cases. You can add across stocks, ETFs, REITs, InvITs today. uh, decide your weighting scheme, however you want to weight it, either by shares or by weightages itself. Save that, track that, and then invest in it whenever you want to. Once you invest, you can set up an SIP. But that was, I think, what both Nikhil and I were talking about in terms of being able to create your own basket or small case and use it as a portfolio management tool in some way for you to
Sure.
decide on your own picks.
Awesome. Okay. I think we are out of time, but I'll take one last question from Anand. Nikhil, are you planning any basket where reinvesting feature is enabled so that we need not keep on looking for the right options at the time of maturity or at the time when we receive, repayments?
Yeah. Anand, I would, if we could do it, I would have done it long time back. There's unfortunately a regulatory restriction in being able to offer a reinvestment feature. Um, it and basically, and it has happened to some extent in P2P. If you're an investor where money was coming to a digital wallet, but SEBI has taken the step of ensuring that any returns from bonds comes to your bank account, and hence you have the power to reinvest it. We are trying to do some innovation within the regulatory, completely in a regulated manner, to give you the option to create a SIP, or to create an auto pay mandate that will allow you to invest in subsequent securities. Um, it's something that we'll hopefully be able to execute also in the next one quarter. But this may not be as reinvestment as you think. It will be more in the way of an auto pay mandate like a SIP for a corporate bond. One way to do the reinvestment, if you are open to a larger portfolio, is to look at a PMS. We do work with certain PMS providers, and we'd be happy to connect with you for a specifically a bond PMS. Though the minimum ticket sizes there is 10 lakh rupees. Yash mentioned in the beginning that SEBI has come out with a new asset class called NPC, or NAC, that may be at 10 lakh rupees, in which case you could also look at that, and that will have an auto reinvest option.
Awesome. Uh, One more important question that has just come up. I think I'll take that before we close it. So recently, SEBI came heavily upon some platforms offering bonds which were not approved. And question is for you, Nikhil. How do we know which platform is SEBI approved?
Sure. So I'd like to make 2 points here. I think it's an incredibly important point, and thanks to Yash for bringing regulation as a part of this discussion. Number one, to look at you need to look for a SEBI regulated platform, right? And for that, every OBPP selling a bond, or for that matter, any broker, any SEBI registered RIA or RA has a SEBI registration number. This is normally displayed on the website of any regulated platform. You can also go to SEBI's website, and SEBI clearly gives the list of approved platforms. So you can also check from there. So that's the easy check to do. I think the second thing you need to make sure is that the product offered on the SEBI platform, on that platform, is also a regulated product, right? There are people who have started sister platforms under a slightly different brand name, and then selling unregulated products. I think you need to make sure that you're not impacted by that. Um, in the specific case of this circular, what the action was taken against unlisted bonds, unlisted corporate bonds, which are effectively unregulated. Please make sure that when you go to a platform, you check whether it is a listed bond or an unlisted bond, and only invest in the regulated product.
Awesome. No, thank you both. I'd just like to, pick up one comment by Krishna Raghavan. Salute to Grip's endeavor to bring alt investments by careful research and recommendations to the forefront. Investor awareness and understanding is the key to growing the market. So, no,
I think that's more for
I
you,
think.
Yash, than for Grip. You've done a fantastic job, and great to be. This is the 10th episode. I know we're coming to the
Yeah.
end of the series but hopefully, but your great work will continue. So super
Um,
excited about partnering with you on this on creating such important content.
Thank you. Thank you to Krishna also. Thank you, Nikhil and Vasant as well. Uh, Again, I'll end it here. We are out of time, but if you have any questions, uh, first of all, thank you for everyone who joined this webinar. I know Saturday morning. People are joining this over the weekend, so appreciate your time. And I would like to thank both Vasanth and Nikhil for sharing their insights as well. Very much appreciated by the audience and as well as me. Uh, for our viewers, any questions for these two gentlemen, reach out to me. You can reach out to me at yash@thealtinvestor.in, or join the Alt Investor community if you're not a part already. Just search on Google Alt Investor. You'll find the link to join the community. And if you did like this video, please don't forget to share it with your investing community so that they can learn more about small cases and baskets as a product or as an asset class as well, maybe. But thank you to everyone who has joined.
Thanks so much, Vasant. Thanks, Yash.
Thanks, Nikhil. Thanks, Yash. Wonderful